So what I really want to focus on in this video today, guys, for the 3 stocks to buy in December is diversity, how important diversity is. So I think maybe some of us that are overly tech heavy and perhaps a little too invested in the MJ industry, we got a really big correction where some of the more value stocks actually held their level and did not take the damage that the tech sector did. So number 1 stock for December 2018, guys, is Citigroup. You have to listen to the professionals. Banking will lead the way. Banking will lead the way back. The Fed is going to do what they're going to do with interest rates, but banking and their earnings is going to lead us back to a bull market. It always happens that way. Every single time historically, when the market tanks off, banking stocks have to pull the market out of the ditch. And so it all starts and ends with banking, and Citigroup is a fantastic position to have. And of course, look no further than the balance sheet. This is the reason why I want to own Citigroup. They do pay a great dividend. They do have very good growth for a bank. But right here, guys, $710 billion of cash and only $494 billion of debt. That is a balance sheet I can fall in love with right there. Coming in at number 2 is Royal Dutch Shell, Class A or Class B. I actually invest in Class B, but crude oil is approaching its 52-week low, has actually already hit it and went quite a bit underneath it. And Royal Dutch is my favorite way to play the oil sector. I like them better than ExxonMobil, and I like them better than Chevron, okay? You're going to get a great dividend payment. Now look, oil does not move fast, okay? Oil does not move up fast, and it does not move down fast. So all we're doing really is picking a good starter position to start investing, okay? This is not a stock you're going to buy and it's going to run to $100 a share by next week, but the value of these stocks are very, very important. Look no further than the amazing dividend yield, 6.06% right now on Royal Dutch Shell Class A shares. So you are always going to make a very good dividend payment on this stock. And like I said, you want to keep investing into the lows. Then when oil starts to rebound and make hikes, that's when you want to start transitioning out of your position. But Royal Dutch Shell is a great company. They've been great for hundreds of years, and I think they're just going to keep being great. And then coming in at number 3, guys, is Verizon Wireless. Now check this out. So while every stock pretty much on Wall Street was getting corrected, Verizon Wireless hit all-time highs. That comes from a great earnings report, that comes from massively raised guidance, and that comes from rock solid fundamentals. Verizon Wireless is a very, very easy stock to hold in your portfolio because you're going to get $2.41 yearly dividend payment. That comes out to about 4%. Now, when they were trading around $47, $48, $49, the dividend payment was well over 5%. So, if you do not have a position in Verizon Wireless, I highly suggest starting one because it holds its value so well. And seems like it's always one of those stocks. When everything has fallen apart, Verizon Wireless manages to hang in there and keep cranking out good numbers and keep putting up good earnings reports. So, thanks for watching, guys. That's all I got.